Thank you very much, Stephen. South Africa's economy grew by 1.2% in the fourth quarter of 2021 and overall by 4.9%. The growth rebound in the fourth quarter was primarily led by the personal services, agriculture, manufacturing and trade sectors. But what factors can we expect to have an impact on our economy in 2022? For that, we go to Paul Makube, Senior Agricultural Economist at FNB. Paul, thank you very much for joining us. You are expecting such a great performance when it comes to agriculture. Certainly, the smallest sector in terms of contribution to GDP, but growing the biggest when it comes to that particular sector in the fourth quarter in particular. But we've seen this sector being a star performer almost every time. Why were you expecting this quarter to be another good one for agriculture?
Thank you, and good afternoon for having me. Yes, we had expected that the performance of agriculture will come out as expected, due to the fact that the indications are there. We had, robust, seasonal rains. We had, strong exports. We had strong commodity prices, and we also had, strong demand for the commodity, and hence. The fourth quarter came out very strong after a contraction in the third quarter, and largely due to the increased, harvests. We had, a good wheat production in the country, and also, the livestock sector, contributed immensely to the, growth in the agricultural GDP. Due to higher slaughterings that increased availability of products for both domestic and external consumption. So those are the factors that actually contributed to this strong rebound in the agricultural sector.
Paul, when you're talking about slaughterings, are you referring to the animal product contribution to the agriculture GDP?
Yes, so we're referring to the animal products in the GDP. Although we, in terms of animals, we're talking about the three categories, which is beef or cattle, sheep and pigs. I mean the figures for chicken are not included there, but I mean those are the biggest sectors that contribute immensely to the agricultural livestock sector. Although chicken is big, it's mainly those that we see on the other side, contributing positively to the GDP in terms of the numbers available.
Let's bring in Isaiah Mhlanga, Executive Chief Economist at Alexander Forbes. Thank you for joining us, Isaiah. Let's start talking about a sector that has been doing very well in the past 18 months, and that is mining. Many would be asking, Isaiah, why then would the growth be a negative 3.1% in quarter four for the mining sector?
I think we've seen a number of restrictions in some key trading partners because of the Omicron variant. Yes, locally we did not have as harsh a lockdown as we saw in the second and third waves, but globally, countries such as China have been imposing hard restrictions. Remember, they were going on into the Winter Olympic Games, and they have a zero tolerance to COVID, which means any infections which will come through, they will lock down the economy. The US and Europe also had imposed restrictions. So that played a key role in making sure that the mining sector did not perform as we would have expected, given that the commodity prices have been performing very well. So it was really a supply, a demand disruption in the key trading partners that are major consumers of some of our commodities.
So, Isaiah, I want to ask if there were any surprises for you in this particular period that we are reporting on, quarter four.
I think not necessarily a surprise per se, but a positive and welcome development. If you look at the gross fixed capital investment, it has been contracting for the past 5 consecutive years before 2021. And for the first time since those contractions, we've seen gross fixed capital formation expand by 2% in 2021. And the good thing about it is that it is the private sector that has seen this significant rebound in investment last year, but also supported by public corporations, which also expanded by about 3.7% last year, following about 5 years also consecutive contractions, which have been actually the driver for the overall gross fixed investment contraction. So, the narrative that we've had from some quarters that say the private sector has been, on an investment strike, it's not borne by the numbers. The numbers show us very clearly that, general government has been contracting and still contracted last year. Also, if you look at public corporations have been contracting except for this year, for the past consecutive 5 years, such that public sector as a whole has been contracting for the past 6 years consecutively. Meanwhile, if you look at the private sector investment since 2010, we only had 3 years of negative growth in fixed investment. The other 7 has been positive, including 2021. So this, again, is in line with what the President said in his summer address to say the private sector should be at the center of economic revival, and we are seeing gross fixed capital formation by the private sector recover back into positive territory following the 16% contraction that we saw in 2020. So it is actually positive because this is what can lead to economic growth improving in the years ahead. It is investment and not necessarily consumption itself.
Indeed, Isaiah, very, very positive outlook there. Let's move back to you, Paul. When you look at South Africa and the region, let's talk about now the year 2022. You are expecting, marginally lower summer crop harvest in the first quarter. When you bring in the fact that we are reliant on some of the agricultural products from Russia and Ukraine, that conflict over there, what does it mean for our agricultural sector in particular?
Well, thank you. Yes, the recent estimates indicate that we are going to see a slightly smaller crop relative to last year. But if you look at the bumper harvest that we see last year, it means that we're ending up with a huge, carryover stock. And if you add this to the expected production, that we are still sufficiently supplied and have enough to export. So from a supply perspective, we are, well supplied as a country. Coming back to the issue of the international market, Ukraine, yes, and Russia are the biggest producers of exporters of wheat and maize as well, and particularly wheat on the export market over 40% of the world exports. So if you remove that on the international market, that's what we see, the spike in prices at the moment. And that has created that kind of instability on the market. Implications for us: we import about 15% of our wheat comes from that region, from both countries, Russia and Ukraine. But we have got alternatives in terms of supply. Australia currently supplies us with about 30% of the wheat that we need. And therefore, other areas should be able to, fill the gap that may be left by Russia. But at the moment, we cannot conclusively say that Russia is out of the market for us as South Africa. It's still possible for the wheat to get through to South Africa. But it's going to be a challenge. It depends on how they are going to get through to us in terms of the payments and so on, given the fact that they have been switched off the SWIFT system. And that's the impact that we see on the local market. We remain a net importer of wheat in South Africa, although we have been seeing a gradual uptick in production over the years. And actually, the recent harvest from 2021 was about 2.26 million tons, which is a record crop for South Africa, thereby contributing towards a reduction in the reliance on imports. So we're still going to pay a bit for the wheat that comes into South Africa. But the whole agricultural complex, in terms of prices, we see very strong prices coming in due to the fact that on the international market, prices are increasing sharply as this war continues between Russia and Ukraine. I've talked earlier about the contribution of the animal sector. Perhaps just to mention that, if you look at some of the results of the poultry companies, has been very, very robust, and that reflects the strong environment for prices for poultry and its contribution. It's closer to 50% of the livestock markets, and it's quite a very important sector. Tariffs that have been increased have also helped cap the imports into the country, thereby improving competitiveness on the local market. But being that as it may, the issue that remains is your cost pressures mounting from high grain prices and the soybean, maize prices that are relatively high means that the margins are likely to come under pressure. But in any event, if you look at the whole agricultural complex, the response to higher prices will be the increased production. That's the cycle that we will likely to see. Weather permitting, as agriculture is highly dependent on the weather developments.
Zaya, let me bring you in here. I've got two questions for you. How your outlook looks like for 2022 in the wake of the ramifications of this conflict in Russia, particularly for the South African economy. And in 2 weeks' time, we are going to be hearing from the Reserve Bank MPC. I spoke to a number of economists who are expecting a growth, a rate hike. What are your expectations on that front?
Look, I think from a growth perspective, we have 2.5% potentially on the higher end of the spectrum in terms of forecasts in the market. We have been thinking commodity prices were going to go up because we have seen quite a bit of supply disruptions that have continued. Needless, we didn't know that Russia was going to invade Ukraine, and it really just pushes that narrative even further because it's quite a major supplier of important commodities. If you look at some of them that we do export as a country, palladium, Russia is about 37% of global production, diamonds 31%. You can then look at some of the other commodities such as gold, 10%. Coal is already mentioned on wheat, again around 10%, platinum again another 10%. So if you look from a commodity complex point of view, South Africa stands to benefit from this unfortunate event that are taking place between Russia and Ukraine. And you would also remember that the past 2 years, in terms of tax revenue collections, we've performed better because commodity prices were performing better. So we are still in that environment where we are likely to see these commodities continuing to perform better, but because of supply disruptions that we are seeing. So it again supports our narrative that perhaps the mining sector will continue to perform well this year, which is going to reinforce our growth outlook. But there are there's another more important longer-term impact coming out of this Russia-Ukraine war. We looked through some 8 geopolitical shocks from 1970 just to get a sense of what happens to foreign direct investments in the year of the shock and after the shock. And what is clear is South Africa tends to see foreign direct investment contract in the year of the shock and after the year of the shock. And when we see the recovery eventually, it does not go back to the same growth levels that were pre-existing before the shock. And this is also evident in emerging markets in general, and also in some parts of Asia. So what we can expect if that history holds is that South Africa is likely to be starved of foreign direct investment in the, once the war is finished between Russia and Ukraine. It might also impact in terms of our expectations as far as climate financing is concerned. Remember, COP26 last year placed some $8.5 billion, and with more being placed once that has been finalized. It's much more likely that Europe and the West in general will be focused on rebuilding Ukraine once the war is finished. And the FDI that includes part of the climate financing will likely take a back seat, which means it's going to be much slower to come. So that is much longer impact that is going to come out of this, Russia-Ukraine.
I hate to interrupt you there, and I want your prediction still on the MPC announcement that we're expecting later this month. But unfortunately, we have run out of time. Paul Makube, a senior agricultural economist at FNB, and Azayam Sanga, executive chief economist at Alexander Forbes, telling us their reaction on GDP figures coming out today from Stats SA.